Welcome to a glimpse of the dynamic world of global financial reporting and analysis. In today's interconnected economic landscape, the need to understand the nuances of financial narratives from different corners of the globe has never been more critical. This course is designed for budding professionals like you. Visualize a bustling consultancy firm in Hong Kong or London. Every day, experts pore over financial documents, advising global giants on pivotal business decisions. Meanwhile, across the Atlantic in New York City, sharp minds at an investment bank evaluate intricate financial data, steering colossal financial ventures. In these scenarios, there's a shared challenge to the diversity of financial languages spoken by businesses worldwide. That's where this course intervenes, transforming you from a mere participant to a maestro in the grand symphony of international finance. In this course, we're going to address three main themes. First, why is there international variation in financial and non-financial reporting rules and regulations? Second, what are the key differences in the variation? And finally, why does this matter? In this section of the course, we explore the implications of global variation in accounting and disclosure rules on equity analysis, credit analysis, and M&A activity. In our introductory sessions, we map out the terrain of global financial reporting. We delve into the reasons behind the diverse financial reporting practices across countries. It's akin to understanding the rich tapestry of cultures and languages in our world, each with its unique charm and challenges. Further, we explore the different roles that stand to gain immensely from this reservoir of knowledge. Whether you're at the helm of decision-making as a manager, providing expert advice as a consultant, making investment choices, or analysing security data, the insights from this course will be relevant. The ability to interpret and compare financial statements from diverse regions isn't just a skill, it's also an art, one that could very well be the difference between an ordinary decision and a game-changing one. But let's step out of the theory realm and plunge into real-world applications. Consider a scenario where you're aiding a firm in its quest to expand beyond its home turf. With the tools you acquire here, you'll be better equipped to evaluate potential markets, gauge competition, and understand regulatory nuances. It's not just about numbers, it's about crafting a narrative, a strategy that ensures success in unfamiliar landscapes. Or, if capital markets intrigue you, imagine guiding a client in raising funds across global bond markets. With your newfound expertise, you'll dissect financial documents to gauge the influence of varied accounting practices on bond dynamics. This course, however, goes beyond the immediate. It equips you for a future where businesses are increasingly borderless, where decisions made in one part of the world reverberate globally. As future consultants, investment bankers, or entrepreneurs, you're not just shaping a business, you're shaping the very contours of the global business environment. In essence, we're not just talking about understanding abstract financial concepts, we're talking about harnessing them, about weaving them into strategies that resonate on a global scale. It's about amplifying your potential, about preparing you to navigate the intricate dance of global finance with finesse. Accounting obviously matters. We wouldn't see the resources spent on it across countries and over centuries if it wasn't providing value. This week and next, we think more specifically about where and how accounting matters. We consider the role that accounting numbers have in the markets, and especially the association between earnings numbers and share price reactions. Despite the ongoing criticism of various accounting rules, we know that earnings are an important input into firm valuation, and we know that prices respond to unexpected news about corporate earnings. We'll also think about the role that accounting numbers play in contractual settings, be it executive bonus plans, loan agreements, and supply agreements. Short-term incentives pay is often determined by whether firms hit financial statement performance metrics, such as EPS growth or profitability measures. Loan agreements incorporate restrictive covenants, which are written around measures including leverage, interest coverage, and minimum net worth requirements. In other words, financial reporting outcomes determine the way in which wealth is distributed according to these contracts. In our second seminar, we'll focus in more detail on why accounting and disclosure rules vary across countries. We'll consider the role of the standard-setting bodies, as well as factors such as whether a country is a code or a common law-based country. We'll think about the way in which accounting has been typically used by countries, be it an equity-based approach or a credit-based approach. In the second section of the course, we'll then go on to examine some of the key differences in reporting and disclosure rules. This will include consideration of non-GAAP reporting, as well as the increasing focus on ESG metrics. So have a look at the readings and make sure that you've been able to log into the FactSet database. We'll play about with that in our first seminar. Send me an email if you haven't yet received your FactSet ID.